Hi guys, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex review for the week starting on 17th to 22nd of June 2018. Previous week started very slow, gained the momentum as the news starting to come out. The main portion was of course from the Eurozone, and that could be a strong impact on the market in general. More and more of the central banks cutting the quantitative easings. The Central Bank of Europe is planning to do so starting after the summer officially. So this is the weekly review for the coming week, 17th to 22nd of June. But first of all, let me of course, as always, thank you for your time. I hope you enjoyed the video. I of course try to share with you and give you my best ideas for the coming week. So if you enjoy that, show your support back, hit the like button, leave your feedback below. If you would like me to cover any of the instruments that I did not, I cover only those that I believe that should be interesting for the beginning of the week, right? After that, I follow up everything in the academy with the live trading rooms and updating everything during the week. So if you want me to cover anything specific, just let me know on the comment section below. On Monday, I will be publishing the weekly review in a PDF version, so just come back on Monday, and on the comments below I will publish the link, and also in the description. Okay, so it will be there for you, or of course just follow up with the newsletter, because I will send an email on Monday as well. So this week we expect to be also very important fundamentally. 3 speeches in a row from Draghi. It starts from Monday going through Tuesday and Wednesday. He is going to discuss exactly about the quantitative easings and the detailed plan. Investors are looking forward for that. He will try to, let's say, maybe calm down and drop the extra excitement the bears got from the Eurozone. Besides that, we have the monetary policy meetings in Australia. We have the building permits in the US. We have a very busy day on Wednesday, and this will be with a speech with Governor Love in Australia, Draghi, Kuroda, and Powell from the US. Very emotional and full of details day to follow. This is going to be Wednesday. Then we have the GDP in New Zealand, the labor rate, sorry, and the monetary policy assessment in Switzerland, the press conference as well. Then it's going to follow in Britain on Thursday, official bank rate and rate votes. I would pay attention to that. Carney already say they will consider to hike the rates in the coming years. I would pay attention to what's coming from there, and basically that's the main portion. Friday the OPEC meeting starts, so we can see some effect, I would say, on the oil and the pairs related to the oil. So that's from the fundamental view. Technical view, euro dollar dropped hard on the last week, and I would not be surprised. And just open my pen that I draw with. Okay, here we go. So as expected, the euro is making the move. I would not be surprised if it dances for a while here, maybe even try to create new low. That would be simply ideal. But I also believe this is coming very close to the end, and a turnaround is not too far away. I wouldn't rush into that, especially not before Draghi's speech, of course. After that, things might change. But we do need to pay attention to some levels. We have this area like a very critical zone. Doubtful we got there, but everything in that conditions could happen. If we connect the tops parallel, you can see we already now in a critical zone, and of course if we drop through the low of December 2017, we get a very critical area in between 110 to 113. I'm doubtful we go there, but technically what we see from the euro dollar is that this special cycle is about to complete itself, and there is no divergence triggered yet. It is going to form, so I wouldn't rush into buys. Meanwhile, I think rallies still to be sold. That was the plan for us for the last couple of weeks. It remains the plan for us. On the previous week, we were talking about the 118 area up to 120 if it managed to cross. It never did. It held a double top with the bearish divergence and pushing that to the levels we wanted to see. There is nothing currently preventing the continuation. That's why for me it is still sell the rallies. Critical zones, of course, is this one and the previous top, the 118. Doubtful we're gonna really be there, but we do need to pay attention to Draghi's speech, and if it does hold here, something like that, for example, that could be a possible continuation further to the upside. So short-term trading currently is the best. We need few more things to settle down before we can make any of the long-term decisions and conclusions. The pound dollar is basically doing also what we wanted to see. Our idea was on the last couple of weeks to look for sells from the zone of 134, 135. We reached the 135, we dropped lower, and we see the continuation. Now, one of the scenarios that was possible there is something like that, 1, 2, 3, and wanted to see the 1, 2, and a possible shoot to the 136 area, 137 even maybe. Never managed to do so. The weakness continues to be strong. There is no signs for a stoppage, so the pound dollar, I would not be surprised if it also continues lower. I think we should be visiting around the 130, maybe 128 area for the pound dollar before the turnaround, because with the recent developments with Trump and his tariffs and the cash rate to be published in Euro and Britain with the follow-up speech, that should be the further development for the pound dollar to fly. And of course, we need to pay attention to this possibility of the double bottom. It's still early to decide yes or no. We don't have any divergence triggered, tick to the upside. So that's why I think as for now it's still bearish pressure, and I would not be surprised to see the pound dollar trying to create some kind of things like that for us with a slowdown, something like a bullish divergence developing, and only after that we will be after buys. The turnaround for such scenario might be, of course, if we manage to break the this high, and then we can start looking for buy the retraces. Again, from my point of view, it's too early for that, but we do need to pay attention to any development from the fundamental, because they are currently game changer and they are very powerful. Most of the time the news don't have such an impact. This time they do. EURUSD was and remained bearish for me. You know my plan here. I'm talking about it for several weeks. Sell the rallies. Currently it's holding this top, so rallies is still for the sell. From my point of view, it was and remains a great opportunity for sales. Meanwhile, we do have some supportive zone here. We have this top as well, so if we can do something like that, we would be looking for sales. Definitely retest of the broken trend line would be great possibility. Bearish hidden divergence would be great possibility to follow up if we get, of course, so new high on the MACD. We need the new high here with the histogram, and then we are looking for the sell option. So for me, it was and remains sell rallies. For those of you, of course, are already in a sell, manage that. Make sure you get some cash out and not losing in drops downs. Next one on the list is the dollar versus the yen. Dollar versus the yen so far still the same, dancing around the critical area here. My view remains the same. We are for sales from the top of the range, or maybe even possibly for a new false break spike with the next divergence to follow up. So the critical zone is this. And what we would want to see is this. We want to see the turnaround from here or slightly higher, as I showed before, break of the trend line, and then sell the rallies. Critical area for the dollar yen was and remains this, and possibly slightly higher towards the area of 112, 113. That's my view, and of course remember the cycle that is developing here, the second leg, which also makes it fit in the same zone, and it's a weekly trend line on the same place. So we should see how that does in that place. I would not rush into buys right now against bearish hidden divergence trendline and daily cycle with divergence. I wouldn't rush into buys, would be looking for my sell possibilities here. The next one on the list is the dollar Canadian, which, if you remember several weeks ago, for those who follow the videos, of course, we were talking about this channel, that there is a good chance that we will be there. We are. Now the question is what's coming next. I think 132, 133 is critical zone where from dollar CAD should drop down. What we have currently developing here is the extreme situation, so I would be waiting for something like that, the slowdown, the divergence to fit in with daily and 4-hour chart combination, and then we would be looking to sell. 132 up to 133 is the place where I think it should form and prepare us the next portion for the sell. Next one on the list is the Australian versus the dollar. Now, the Aussie dollar had an amazing opportunity for buy in terms of cycles, which never followed the plan, unfortunately. That was the triple cycle to the upside, triple cycle on the last leg as well, in a beautiful channel. Though the idea was very simple: get the two waves, which we did, hold that, which we did, with bullish divergence, which there was, and then mark the trend line breakout, get a continuation. Never managed to gain the momentum above the trend line, never managed to bring serious balls, and instead of that, the trend line was broken to the downside, which gains the momentum. Now, where it comes from, the tariffs and the trade fight between Trump and China brings the immediate impact on the commodities, of course. That's also why the gold and silver crashed, but we will talk about it in a few minutes. And Australian, as one of the most affected commodities pairs, would be the one to be affected the most. So as long as the situation is sensitive among all that, and between China and Trump, China and the US, I would be very careful with this. Currently the momentum is back to bearish. Not sure how strong it can hold it, and how far can we go according to the cycles. There is still a room. Just draw that. Here we are. There is still a room for some kind of situation like that with the turn before the turnaround. So that's why currently the momentum is bearish, and I myself wouldn't go for long term here. For a short term, until the new divergence would pop up, I would be looking definitely for sell possibilities here and here. There is a trend line going on and a channel developing. You can see that we slightly have a room to the downside. So definitely worth to deal with that on the short term. There is no divergence on the daily. There is no divergence on the 4-hour. The cycle levels only bring it and suggest it lower. That's the currently 161.8, but without the divergence, so there is a very good possibility for that until the divergences will take place and stop that. Again, it's currently very sensitive with all the China-US throwing tariffs on each other, but definitely one of the greatest opportunities from my point of view for the short-term trading. For long-term, I wouldn't rush here now, especially after the bullish scenario failed. The next one on the list is the New Zealand Canadian, very good one. Our plan was and remains looking for the sell possibilities here or slightly higher from this area. We do want to see the turnaround in terms of lows. Still didn't happen. It could happen at any moment, so keep an eye on that. We do want the lower lows here or one more fake high back to the tops here, and from there looking for the massive sells. I still think this is going to be one of the best pairs for the long term. The reason is the weekly and the daily cycle combinations. Next on the list, Aussie versus the Kiwi, which we are after long-term buys. They paid on the first portion from the 105. Now that's what very likely is going to happen on the next scenario. Daily chart is creating a bullish hidden divergence. Critical level is right here around the 106. This is what we get on the 106. Now there is 100 level which is currently happening. There is no false break yet, so we need to see if it managed to make the turnaround and make the breakout. If yes, we can start looking for the buys. If it doesn't do that, we are going toward the 106 cube, and then we are after buys. So this is the plan for this pair, and I think it's one of the very interesting opportunities currently forming. Euro versus the Aussie is another very interesting opportunity. The way I see it, currently it's bearish, which is understandable with the fundamental scenario, but I think this pair is approaching to some critical sell zone, possible sell zone, and here is why. The weekly cycle is, the last cycle was triple, and I would expect double wave correction to the downside. The daily had for us this kind of movement, so correction here could provide a second bearish push. This is a bearish hidden divergence developing on a daily chart, and on the 4-hour chart we got triple ascending cycle push down, and now pushing the second leg to the upside. So the size of that could be measured as here on this cycle, and that's the critical zones to pay attention to. Of course, 1, 2, possibly here, but very doubtful. So these are the critical zones from my point of view for the sell. And of course, remember, there has to be a combination of daily and the 4-hour chart divergence to make this sell official. Next ones are the commodities gold. Gold was bullish above 1280. It was holding it perfectly and providing the rally. Ugly, but providing the rally as expected. It crossed the 1300, sorry, which paid big time on that rally. But what happens now is the new tariffs dropped on China. 2 waves broken to the downside. That could be bearish enough for the gold. There is no divergence currently formed and completed between the weekly and the daily. Daily is only a potential. So meanwhile, on the short term, gold could make some pushes lower. Just a quick reminder, we still have this channel. Let's zoom in for a second. That that was the first one that was broken before. Now we have the lows connected here and the tops connected on this area. So 1260 could be definitely the next possibility for this cycle, but I would also remind you that this is a very possible push to the 50, which is 1240 right here. Why? Due to this triple cycle that the gold had for us before, and that could turn to be exactly this scenario. So on the short term, gold is, thanks to the news change of course, seems returning bearish. And I say short term here because this divergence, once completed with the combination of weekly and daily, it could be at any of the moments, I believe, then it will make the turnaround. Meanwhile, it is short term turning bearish. In validation for this scenario, for the bearish scenario would be if it's suddenly, and everything could happen in this emotional, sensitive situation between the US and China. Breakup of the last high would invalidate the short-term sell view. Silver, I wouldn't deal with that now, as it is back to this. Wouldn't deal with that at this moment. Oil, we were bearish here in our plan. We remain bearish. That was an amazing run and breakout, as we wanted to see from the previous week. We got our turnaround, we got a breakout, and boom. As for now, it seems like it has a room. Weekly cycle suggests us 38 to 50 here, and possibly the big double cycle which we currently have here, which also could take that lower. So oil was and remained bearish. Our plan was and remains sell the rallies. Indices, the turnaround here on the the German DAX turned that around during the last week, again with the news from Draghi, of course, and for me it becomes neutral. I was bearish here in my mind. I was looking to sell the rallies, and with the new breakouts, never happened. Never got any good real sell reason, so it's time to, as for now, time to avoid the sell plan. Weekly doesn't seem supporting too much currently. Of course, everything could change. It's very, very sensitive at these conditions, but the way it looks, there is a good chance we are going for one more possible breakout here with the monthly divergence to develop possibly to new high. So as for now, for me, that's neutral. And one that starts to be interesting is the NASDAQ, because it is on the second high. This was the first false break. This could go and turn to be the second false break with the new tariffs coming and the new program plan. Who knows how it's going to happen. Regular divergence here turning to be a fake convergence with a new momentum that could be the scenario for the sells. What is currently happening here is we need the false break to form, which means to drop and be below the last broken high. Daily false break to happen and to break the trend line, which is currently here, create lower lows, and then and only then we can drop to the 4-hour chart and look for the turnarounds, lower lows, trend line breakouts, and then sell the rallies. Keep an eye the sensitive situation among the countries would bring its impact. And for cryptocurrencies, MONERO is a very interesting scenario here with the double cycle it has for us on the daily view. Bullish divergence developing. So what we would want to see is the 4-hour chart gaining some momentum for us. The last trend line was broken, so it starts to seem interesting. This would be the invalidation to this scenario, and start possibly looking for the bullish retraces. Bitcoin is basically, on the previous week we had this scenario. We got a breakout, we got a push. Now look what is happening here. This is the scenario for the classical bullish setups. So this is the invalidation for us, and we would want to see buys for the Bitcoin taking place. Of course, if it starts to create higher highs, it would make it easier into the buys later on, right? So that's the idea for the Bitcoin. Ethereum also joins the same area, triple cycle to the downside, 1, 2, 3. And the last trend line is broken, so definitely could be a good turnaround. This is the last invalidation. Okay, so that's basically all. The way it looks, the market is building up a lot of great opportunities. Be there, follow, don't force, wait for the clear setups, and let the market give the sign for you it's happening. Don't try to make a bet on oh, that's a good level, let's attack. Don't work only with levels, work with the principle of 3 steps: level, confirmation, setup. Once you got this combination, it's your best odds to be right. And the game of probabilities and statistics, which is the trading, that's the smartest thing you can do as a trader. So thank you very much for watching my video. I hope you enjoyed that. I wish you wonderful trading during the week. If you have any questions, leave down your feedback and your question. I'll do my best to reply as soon as possible. Hit the like button if you enjoy my video. Feel free to share with anyone who you believe can have any of it an advantage and benefit by watching that. And enjoy your week. Thanks once again. Yours, Vladimir Ribakov, Traders Academy Club.